Hi, this is Lex, and welcome to the FinTech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Hi, Matt. Welcome to the podcast.
Thank you very much for having me. This is very exciting.
My pleasure. I'm excited to have you on. Matt Lowe is a good friend of mine and a colleague in many different ways. And so let's just start off with a little bit of background and then hop into the meat of our conversation today, which will be about digital collectibles, crypto art, NFTs, and all the crazy things going on. So, Matt, who are you?
Oh, who am I? I'm a South African that's based in South Africa at the moment because of COVID. But in the real world, I am a crypto advisor and I am a co-founder of a DLT startup that's working on new age infrastructure for the crypto universe.
Awesome. It's hard to tell what is the real world versus what is just the COVID Zoom world anymore. But I guess that's par for the course, because what we're seeing in our Zoom world is also the growth of some pretty amazing markets, some pretty confusing, new, exciting markets that I think are going to be also really polarizing. That a lot of people will think, sure, it's fine for Elon Musk to buy $1.5 billion worth of Bitcoin for Tesla for its treasury, but this stuff, these little pixelated icons and so on, this definitely can't be worth it. So let's open up with just some definitions around what we're talking about. People say NFTs, non-fungible tokens. They say digital collectibles. What are all these things? What do they mean?
Yeah, it's very exciting times. And, NFTs have kind of been the source of these very interesting whispers around the globe over the past few months. And there really are strong contenders to steal the spotlight in the 2021 crypto world, apart from the Elon Musk's pumping the 1.5 billion into Bitcoin. The relatively short history of the crypto universe at the moment has been characterized by waves of trends like the 27 ICO boom, the 2017-2018 smart contract platform era, the 2018-19 stablecoin era, the 2020 DeFi craze, which I arguably still believe is ongoing. Although that's kind of the main focus for 2020 on an infrastructural level, NFTs have been gathering traction as this gamification of the crypto infrastructure, which is really interesting. And the idea of fungibility versus non-fungibility is quite difficult to discern because these are words that not many people are familiar with. So I think the distinction needs to be made in three ways. Non-fungibility speaks to uniqueness. So deep inside these tokens is metadata that describes what makes assets different from all the rest. And this is kind of a permanent, unalterable record that describes what an NFT represents, based on the various infrastructure that it resides on. And this makes it rare. And scarcity is very important and has been a thematic in the crypto space throughout its history, because it's a recipe that makes these NFTs so attractive. Whilst developers have the freedom to generate an infinite supply of certain assets, they also have the power to limit the number of rare and desirable items in existence. And, we know rare items like the Mona Lisa by Da Vinci. These things can be printed out on your printer as a copy, but you'll never have the real thing. And the real thing is what's important. And the metadata kind of keeps that uniqueness to the rare item. And the other aspect is indivisibility. So for the most part, NFTs cannot be split into smaller denominations like cryptocurrencies can, which makes them fungible. NFTs can only be bought and sold and held as a whole. You can't purchase kind of 10% of a plane ticket in the real world or collect 50% of a baseball card, but you can own 10% of a Bitcoin. So these whole works of art kind of entrench the uniqueness in the asset and mean that when you acquire it, you're acquiring the whole thing, the history of it. And that's what makes these things incredibly interesting and very exciting.
Yeah, you can think of a sandwich and the money used to buy the sandwich. And the money used to buy the sandwich is fungible. You can add or subtract $1 and it can be from one pocket or the other and nobody has any emotions about it. Back in the days when you would have money in your pocket. But the sandwich is pretty non-fungible. Like you want that particular sandwich and you want it in the shape that it's in, and it's an object. And so the NFT is a thing that's anchored to the blockchain. And I think to try and preempt some of the ideas people have about value and what makes art, and I think I'd be happy to go into that discussion, but one of the core things about art and about valuable objects is their history. And so, yes, you can take that picture of a painting and print it out as a poster, but it's not worth anything because it doesn't contain the history of the actual made object. It has no historical context. It was not made in 1350 or 1890 or 2021, and it wasn't made by the person that made it that experienced hardship and war, or was at the court of a particular monarch, or was a pioneer of some internet movement. And so these are partly the things that generate value for cultural objects, and NFTs are cultural objects. They're just embedded on blockchain. So let's touch on some of the economics just of the market today, so people have a sense for the scale. Today, the transaction volume in NFTs is annualizing to about 150 million per year. So it's not gigantic. It's not the 60 billion or so at Christie's or Sotheby's or other auction houses for art, but 150 million is enough to power up an industry of players around it. And then there are other projects that we'll touch on in more detail, like NBA Top Shots, which are digital collectibles, which, if I have it right, have had about $6 million worth of sales to date and about 60,000 different transactions and trading between people. And so these are very active communities. These are very active ecosystems and products. And like you said, whereas 2020 was all about the decentralized finance infrastructure, 2021 is starting to see these assets emerge as something that is beyond money. It's an actual thing that people are interested in owning. So let me ask you, which of the platforms or which of the projects do you find the most compelling, and kind of how do you think these fit into the overall kind of crypto portfolio or crypto ecosystem?
You hit the nail on the head when you mentioned that the revenues aren't nearly close to the revenues of major art galleries, or even the crypto universe, but they're definitely catching up. And I think having looked at crypto art data, the estimate for total crypto art value is something like $78 million that currently resides across these variable marketplaces. And one of the most notable original examples of NFT projects is obviously CryptoKitties, which was the boom in November of 2017. CryptoKitties being a game that was built on Ethereum blockchain that allows users to collect, breed, exchange virtual cats of varying designs and of varying rarities based on those designs and looks and the artwork behind them. And that was really kind of the first example of NFTs really showing prowess in the crypto space. So NFTs aren't necessarily a new thing, but they definitely have been growing of awareness in the last couple months. And maybe that's argued as the cumulative effects of COVID-19 and people being indoors. Couple that with a bull run on cryptocurrencies, and you've got something that a lot of people in the crypto space want to spend their money on and use as a mechanism to gain the upside on the value. I look at Rarible quite often and see kind of the new projects that sit on Rarible. And one of the most notable top sellers on Rarible is Lindsay Lohan, the actress. And, in the last day, she made 14 ETH, which, amounts to just over kind of $25,000. And I don't know whether she's the one making the art or whether she's got someone curating the art on her behalf. But it definitely is astounding to know that an actress that some would argue whether her career has not failed in the future years, but she's kind of relying on revenue generation through NFTs, and I think that's very cool.
Yeah, there's a lot to say about building an audience and monetizing an audience. And I think the CryptoCat stuff it's almost quaint now because we are at a place that is probably 100 times larger than that moment. People were sort of taken aback when there was $100,000 transaction around an NFT back then. And today you can find a handful, I mean, maybe 5, 10, 20 different digital artists who are selling $50,000 to $100,000 works on these platforms every single week. I mean, it's almost, it's no longer news that something is 50K or 100K because that is available for popular digital artists. And so, there's the style is kind of it's fun to talk about because it's this combination of really futuristic cyberpunk 3D rendered stuff that has got astronauts in big floating pink spaces, or it's got things that sort of look like abstractions or Basquiat that are sort of tagging or urban design culture. And all of that has bubbled through the internet, through various meme factories, through various trends and fashions, and then got married into TikTok and traditional celebrity. And now you've just have all these creators that are making things that digitally native users want to own. What a digitally native user is, we're not really talking about millennials probably anymore. We're probably talking about Gen Z that understand the concept of the metaverse, that hang out in Fortnite, whose portfolios are primarily crypto assets, and who are engaging with things like the CryptoPunks or hash masks, or whether it's the different works sold individually by artists, and they're buying them as really status symbols and as ways to continue to spread the wealth and seed the ecosystem. And so again, I guess just the main point I want to anchor is that the order of magnitude for the prices of things and what others ascribe these things to be worth is now 100x probably what it was 3 years ago. Now, you've mentioned NBA Top Shot, and speaking of celebrities, I see Gary Vaynerchuk talking about collecting basketball cards and collecting like vintage cards and making that as a hobby, as an investment asset class. What's the history of Top Shot, and why do you think it's catching on like this?
So one might be thinking, how in the world does crypto or blockchain have anything to do with the sports card market? And this is where the NBA Top Shot was effectively born. The concept of NBA Top Shot came to life in July of 2019 when the NBA Players Association, and Dapper Labs, manufacturers of CryptoKitties, got together for a joint venture. Now, Dapper Labs is a consumer-focused flow blockchain product made for fun and games and supports digital collectibles, responsible for the high-flying digital collectibles market like CryptoKitties, as I mentioned. And they've been recently raising funds that should effectively net the firm more than $250 million at a valuation of about $2 billion. So they are one of the foremost platforms for NFTs. Now, NBA Top Shot is an officially licensed product of the NBA in which users can own a piece of the action known as a moment. So they don't necessarily sell a tangible card, they actually sell these things called moment. And a moment is an NBA highlight that has become a digital collectible and can be held on to forever. So it's a little snippet of a video that's really pertinent to what happened in the sport at that time, and it's really cool. So a moment can be LeBron James scoring an iconic dunk at a certain pertinent game, and an example of this has sold for $71,500. So the common question is, why would I buy a highlight I can watch on YouTube? But actually, the real question is, why would I buy a sports card that I can print out on my computer? And the answer to this is proof of scarcity, authenticity, and ownership that gives these assets value, both in the digital and physical world. Each moment is assigned a set, a series, a tier, and serial number verifying the individuality of each moment minted. And these have been really successful. On NBA Top Shot, the highest daily sales have hit kind of 6 million on January 24th of this year. And they've kind of stabilized around the 2 million mark, which is quite significant for a NFT marketplace. As is my belief with crypto, it's not too late to get into something like NBA Top Shot. It's still in its beta. They're still continuing to make improvements to the platform and increase efficiencies with processes throughout the site. And that's kind of what's driving the likes of Mark Cuban to get really excited about this space and invest tens of thousands of dollars on these moments. One of them recently sold to a guy called Jonathan Bales, who's an active crypto evangelist, for $35,000. And people are throwing real money around these things, and it's quite exciting.
Yeah, so I misspoke. I said 6 million before, but it's actually all time, like you said, 6 million is the daily. All-time revenue is 85 million for Top Shot, and I'm sure that's gonna keep going. I think one of the, like, so what is it that you're collecting? Like, you're owning something, and in the case of Top Shot, it is a little video moment from basketball's history, and so it's an animated object, and it's something super rare in the sense that you might want to memorize some particular score or move or whatever it is that's special to you, right? So you've got affinity with the team, you have the scarcity of the moment, you have the very many moments that are generated by a basketball game. You have this as a monetization path for an owner of a team, right, which is a media asset. And so there's lots of really interesting elements to that. The second thing to say on this is around Ethereum versus Flow. So Dapper built CryptoKitties on Ethereum, and they at the time basically broke the network. They flooded the network with transactions around all these cats, and the transactions just wouldn't clear, and the whole thing was really grindy. And so Flow is another sort of blockchain project. It's not decentralized in the way that Ethereum is, so it's not necessarily you're not getting these benefits of true scarcity and decentralization, but you're getting much easier consumer adoption, and you're sidestepping the gas fee issues, which could be, $15, $20, $50 just to send an NFT on the Ethereum chain today. They're sidestepping these cost issues by running a proprietary system. But again, we're gonna, I think, continue to see this type of thing expand and grow. And then the last bit that really sticks out to me is that they're not crypto people. They're not the, deep sort of libertarian anarchist or sort of techno collectivists that are here to try and rewrite the internet. These are like just people in the spotlight or with an audience that are converting into these assets and saying, this technology is really cool. There's novelty here. We think it's the right frontier, right? So even someone like Lindsay Lohan to be pushing stuff out on NFT platform, or Vaynerchuk talking about the Top Shot project, or Elon Musk talking about Dogecoin and sort of trolling around the various prices of these coins. Or now you start seeing traditional art critics from the academic world having to engage with crypto art, because that's where a large shift of incremental sales is happening. I think that is really significant, and is, whereas we had a financial services talent sort of drain into Ethereum and programmable blockchains over the last few years to build new financial infrastructure, you're going to have a media, entertainment, and creative talent drain into the crypto ecosystem. And that is super important, because the creator economy and the audiences that are formed around that creator economy, that's what makes YouTube work. That's what makes TikTok work. And so I'm really excited for all the new people that are kind of coming into the space because of this new exciting vector and continuing to build things out. Do you think like regular creators will come in? Like, how do you see that happening over time?
I definitely see regular creators coming in. I think if anything, the hype around crypto has really kind of brought the attention of this space to a guy who's building a NFT platform the other day called them the normies. And I think that's quite a common word for the individuals that are unfamiliar with the space. I think it's a little bit derogatory, but it's out there. I want to touch on kind of two things that are really exciting about this space, and it kind of talks about the type of NFT apart from your standard piece of artwork or digital rendering that can also exist in this space. And it kind of your messaging about these celebrities that are punting this space. The one is that the other day when Dogecoin was shooting for the moon, the price was escalating quite dramatically. Elon Musk, I think it was on kind of nearing the end of December 2020, tweeted the words, one word, Doge. And that was enough to kind of ramp up the price even further of Dogecoin, and it became kind of this meme stock. But what was interesting was recent news has kind of come to the fore about a individual that's willing to pay $7,777 for a tokenized replica of that tweet through a service called Valuables. And Valuables is a platform that allows users to put up money for a tweet that exists on Twitter, and the individual responsible for that tweet can accept that purchase if they wish. And one individual that's really taken advantage of this is the billionaire Mark Cuban, who sells NFTs of his tweets all the time for about $1,000 a pop. So that's a very interesting kind of play on the NFT space.
Yeah.
And there's another one that's really interesting, and that speaks to a platform called Async Art, which recently secured about $2 million in seed funding. And Async Art is a really great example of this kind of next generation of NFTs. And that's it. It takes advantage of creating programmable art or digital creations that are split into layers that allow collectors to become a part of the art itself and alter the final work after it's been traded subsequent to its creation. And obviously this is really compelling because art is most impactful when viewers can see themselves in it, when owners can have their part of it or represent a piece of themselves in that artwork. And programmable art allows for collectors to connect more deeply in that fashion. And what hasn't been said in this edition of the podcast is that, Lex, you're a digital artist yourself. The artwork representing this podcast is actually one of your very own and is very unique in its creation. And I want to know kind of from you how you feel about programmable art, how you feel about the space itself as a digital artist yourself.
Thank you for the softball. I love it. I also want to say I love that Mark Cuban is sort of an ETH head. You know, it came out on Twitter that Cuban not only is tokenizing his tweets and cashing them in, but is also trying to figure out how to use Aave for earning an interest rate. As a great conversation with him, and I believe the Defiant about sort of his exploration of decentralized finance, and it just points to a lot of folks that are role models for people these days, the Musks of the world, doing this, and role models of the past, like Warren Buffett, not really grokking it. And all respect to Warren Buffett, but we are in a very digital, different sci-fi neo-cyberpunk world now. And, you know, for folks that can be curious about it, it's really a great time to to enter. I love async, and I'm excited about their fundraise. It's a really distinctive idea where not only is there some particular object like a bounded NFT that you own, so it's not just a sandwich, it is the stuff inside it too. So you can have layers of the artwork that are owned by different people, and then those layers can be programmable. So for example, they can change according to the price of some particular asset, some interest rate, an amount of traffic to a website, whatever you want. Or they can be controlled by governance, or they can be swapped out by the individual that owns the control to those layers. And so you go from an individual object that you own, like a store of value, to a collaborative community object that has a story that its owners paint together. And then the ownership of the object can change over time. And, for folks that think about cultural artifacts, it is specifically this history of change and who has touched it and who hasn't and how that makes it really important and valuable. Now, if you're in some small town in, I don't know, Pennsylvania, or pick a historic place, if you're in a site of a battle from the Middle Ages in France, it's the who's been here and what have they done. What general passed through here, or did the turn of the war change the tide of history change here? And I think we are seeing that type of mechanism actually being put into software, and then the keys given to people as an economic game. And so this is massively novel. As a creator, I'm personally really excited about it. I think if I had a little bit more time, I would do much more participation, because it's a really beautiful space. It's interesting, and it is a vector of monetization for digital art that just that did not exist before. And so that means we're going to be seeing a huge influx of beautiful, interesting, difficult objects that are going to make the history books. And I think that now is the time.
Yeah, totally. I mean, I would love to segue then into Beeple and the incredible individual behind it, who has been described as, I think Esquire magazine described him as the dad from Wisconsin who drives a piece of shit Corolla, and his brilliantly absurd artwork has made him the face of a crypto market you didn't know existed.
Yeah, that's pretty good. I mean, and here again is this point about monetization. So Beeple is massively popular, and the art that he makes are these daily renderings of, you could call them cartoons, but they're immaculately rendered. And sometimes they're political, sometimes they feature pop culture. It's sort of in the Andy Warhol line of style or history. And he has been making these renderings, I think, for something like a decade every day. Sit down in front of Cinema 4D, think about some clever thing to make, spend hours on it, give it a cool futuristic background, put it up on Instagram and Twitter and Tumblr and whatever else, and do that for 10 years. And you do that not because you've got a goal, but because you love the process so much. And over that time, he's amassed a gigantic audience, millions of followers on Instagram, and is one of the well-known digital artists. But there's no clear path to monetization other than making commercials for some brand that aligns with you, or making music videos or things like that. So I don't think he's suffering with his Corolla, but it is still massively transformational to one day wake up and find a collection of your work being acquired by your fans for $3.5 million, after 10 years of work and not knowing that was going to be your outcome. So very, very exciting that that mechanism exists for people who are making the good stuff.
Yeah, I mean, so the guy behind Beeple is obviously Mike Winkelmann, and there was a description that if anyone has yet to see his artwork, it's great. It's smashing together kind of pop culture, technology, and a post-apocalyptic scenery into commentaries on the way that we live and commentaries on the status quo as it is today. For example, one of my favorite is the day that Jeff Bezos announced that he was departing as the CEO of Amazon, people released an image of the Amazon founder as a massive threatening octopus emerging from the ocean as military helicopters circled above, and it was titled Release the Bezos. And I just found that absolutely fantastic. And he's done a bunch on Donald Trump and the election saga. And like you said, the thing that makes his artwork really unique is that, embedded in the artwork itself is a smart contract that allows for the benefit of value to be provided to the artist or the creator in the secondary market. So any follow-on sale of his artwork post the initial one, he still earns a percentage of that through that smart contract. So I think the figure was in December of last year, collectively his artwork sold for about $1.7 million in the secondary market. And if his smart contracts enable him to allocate 5% of every amount of that sale to him, that would mean that he gets an additional $85,000 automatically from that secondary market, which will only fuel the creation of more of these incredible pieces. Artists normally, give away their firstborn child effectively in the form of these beautiful artworks and never see any kind of recognition or value from them in the secondary market. And here you've got blockchain and smart contracts really providing that benefit. And I think that's really exciting for artists.
Absolutely. And it goes to this trend, this broader trend of just much more direct ownership of assets, holding your own wallet, holding your own money, and abstracting away or collapsing away the value chain between the exchange, the financial stuff, and the customer. And so, in this case, you're not going to get a check from some third party for resale. It's just programmed into the piece. So if you're doing the sale, I forget if it's Rarible or OpenSea, but wherever you're doing the sale, you're just getting the trailer in perpetuity, and that's built into the ownership mechanism. So listen, we've covered a lot, and I think some of it really out there. And I know a lot of our listeners think about fintech, and they think about financial advice, and they think about asset classes, and all of this sounds like a game. In a way, it sounds like a toy. And I think what I want to do as an outro is just to anchor why this is relevant and important for even the most serious of financial professionals. So first off, think about any family office or ultra high net worth investor or institutional money manager. I think about Neuberger Berman often because I worked at Lehman and Neuberger was part of the family. And when I'd go to Neuberger Berman, which managed 200 billion or so in assets, as you enter the building, there was a collection of 80s art that the founder had put together, and it was part of the investment firm. And so I would think of these digital creative outputs, these art pieces, as the thing that the crypto nouveau riche, the digital generation, which is now amassing wealth, this is their gallery. This is their art asset. This is their family office. And it is directly similar to the art asset classes of prior generations, but it also builds on the value and the revenue that young people are trained to value in video games like Fortnite and others, where skins and other social attributes are the revenue stream, are purchasable, and generate status. And so you can think of it as status, you can think of it as an asset, like an art asset, and it belongs in a diversified portfolio. The other thing I want to end on is that it's increasingly hard to be a serious person. The world is in many ways a circus in terms of the endless money printing, the negative interest rates, and it's hard to take seriously sort of the stability of the system. And that's coming out in all sorts of different bizarre ways. And if, as a financial advisor or a banker or a loan underwriter, you think that the seriousness is your competitive advantage, the bad news is that software is way more serious than you are. Software these days, is coming out at scale with various personal financial management tools that feel and look and behave in a super reliable way. And we see things like Google Pay and PayPal and Square building out full consumer fintech bundles that really take away the human work that financial advisors have relied on to do. And we see these robots coming all across the different asset classes. You can think of some of these positions as equivalent to a librarian versus Google. So librarian has deep knowledge of their local craft, access to information, can really help people and can do it in an emotional way and be fully supportive to their community. But of course, you're first going to go to the Google search screen on your mobile phone. And this is what's happening to finance as well. So the reason we focus on the edge and the reason that we focus on things like the metaverse and the digital art classes is because this is where the creators and the attention is going. And this is where we think folks can get a fantastic competitive edge if they understand what this is and how to get ahead of it. So, Matt, thank you so much for joining us on the podcast. Where can our listeners find you and get in touch if they want to?
Thank you so much, Lex. Listeners can get a hold of me on Twitter at Matthew James Low or on LinkedIn, Matthew James Low, and you can find me there. I want to end finalizing your point there. And capitalism is a social system, and digitalists understand the power of the crowd in that social system to maximize the utility of monetizing all things in the cyber world. And as everyone in the world becomes connected to this network, it is likely that everything that can be tokenized will be. And I think that's more of a certainty than most things that I'm familiar with in this day and age. So, I think we live in exciting times, and it's just a matter of wait and see.
Awesome. Great to talk to you.
Thanks so much, Lex.
Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things fintech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.